While Bitcoin may never truly take off as a currency, the technology behind it, known as blockchain, looks set to revolutionize areas such as payments, mortgage assessments, or stock issuances even. To take us through the wonders of blockchain, I'm joined by Dan Barnes, a journalist and former technology editor of The Bank, who's just written extensively for the magazine on this subject. So Dan, thank you for joining me.
Thank you, Silvia.
So first of all, what is blockchain?
Well, if you take a current payment system, typically transactions work by being sent to a central point, and the central point confirms the transactions. Then after the transaction is completed, a process of reconciliation happens post-trade. So typically, if one trades shares, the settlement actually occurs 2 days after the initial transaction. Blockchain is basically a database which is included within the transaction chain. So when a transaction is made, a record of it is made in what's called a block. And for another transaction to be made with that unit of value, this works for bitcoins, for example, the previous transactions have to be checked and confirmed. Then a mathematical model records the new transaction and adds that to the block. So the block contains an immutable ledger of the transactions, so the history cannot be changed. That means there can be no double counting and there can be no incorrect payments. Or if there are incorrect payments, if a transfer were to be made but faultily, then it could be checked and you could see where the transaction had gone to. So
the beauty of blockchain is that all the information is there, it cannot be modified, and it can be accessed by anybody.
You put it far more succinctly than I did, yes. But why this gets interesting is at the moment it's used for Bitcoin. Now Bitcoin as a currency is not particularly interesting, but using that technology for other units would be very interesting indeed. So as I mentioned, if equities are settled on a T+2 basis at the moment and you have to check that no errors were made, using a blockchain system to transact equities could be faultless, effectively. Now that means you take away the hub and spoke model for the transaction, so you don't have to go to the central point of exchange, you don't have to go to the central settlement facility. You could settle instantly, or at least within a matter of minutes.
So this is truly revolutionary.
Absolutely.
Who is looking at the technology, who is looking to apply it, or who is maybe already using it?
Well, the banks I know that are looking at it at least include HSBC, BNP Paribas, UBS, BNY Mellon, ING, Fidor Bank in Germany. And Fidor's already using this as a method of payments for clients, for retail clients. NASDAQ has actually brought a blockchain system in for the issuance of private stock. So rather than public stock, within the private network, stock can be issued on a blockchain. You can always see where it's gone, who it's gone to. The reason this is really advantageous also is that it's very cheap to set up a blockchain system. Take a payments network like Swift. Swift is enormous, quite expensive, lots of infrastructure. A blockchain network could potentially even be run over the internet. Probably people wouldn't want to do that. But it's very cheap.
For security issues, I would
Exactly.
imagine, and that's probably one of the areas that all these companies are looking into to make sure that the structure is safe and protected.
Exactly. I mean, you could run Swift via a blockchain system, but at the moment, this is very new technology. It's quite untested by large institutions, and so they're currently running all the tests they need to make this into an industrial grade system.
And when do you see this happening? When do you see blockchain becoming mainstream?
Well, it's happening right now. I mean, NASDAQ are already using it. We know all the big banks are looking at it at least. And I mean, in at least 12 months, we're going to see more systems. Over the next 12 months, we're going to see more systems come online. The question is, who's going to be doing what? And whether it's going to be interbank or whether it's going to be individual banks putting systems together themselves. The really interesting thing happens is when it's interbank. So if somebody like Swift or a stock exchange were to start looking at blockchain for transactions, that gets really interesting.
So this is a technology that provides all the information necessary to understand what the transaction is about without allowing anybody to modify it without their knowledge, effective, fast, and potentially airtight, so that there aren't any mistakes at either end of the chain. So it's truly evolutionary process, and it sounds like we're going to see much more of this in the short term. So perhaps we need to catch up with you then in the next few months to see how things are developing. Thank you very much for joining us.
Thank you, Silvia.